Hey, it's Jennifer Lawhon with Lawhon Home Team and PRB, here with your monthly market real estate update. And this is going to be for February. Let's get started. First, let's talk about home ownership as being a hedge against inflation, because we all know the talk right now for a lot of people is inflation. So let's look at a quote from Investopedia. Real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. And let's look at a graph here. So in blue, you're looking at the inflation rate since 1970, so per decade. And in the orange, you're looking at home price appreciation. Now, if you notice, in just about every decade, home price appreciation has actually surpassed the inflation. So if inflation was up, we see home price appreciation. 1980s, pretty close. You've got 5.6 and 5.5. Now, the only time when I'm looking at this that I actually see it a little bit lower was in the 2000s, but we also know in the 2000s we had those lending practices going on that since have changed. We also did not have a lot of equity in home ownership at that time. But overall, if you're looking at this historically, you can see that home appreciation has actually been higher than inflation. So it is a hedge against inflation. So let's see, James Royal says that a fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. That's certainly not the case if you're renting. And I can tell you, we know people that have said that their rent has gone up 30 to 40% just in the last 1 to 2 years. So also let's look at this graph with its rent increase greater than inflation. So rent increase has actually been, in most years, greater than the core inflation rate. So in blue in this graph is the core inflation rate. In orange is rental price appreciation. So if you look historically, most of the time, the rental price has been higher than the core inflation. So when inflation goes up, typically you're going to see rental price also go up, but sometimes even higher than the inflation rate. Natalie Campisi says, homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happening in the market. Tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary times. Now let's look at this graph. This is cumulative house appreciation by 2026. So this is the projected forecast, right? And then we're looking at, there's a few here. We've got the optimists, right? They're saying 62.5%. An average of all the panelists would be 43.3%. And then we've got the pessimist side here, which is 23.7%. Even if we go with the 23.7%, that's still good appreciation. So I'll take any of these. Now let's go to mortgage rates. If you look at, this is starting in 2020 all the way to the left. Then we go to 2021. Obviously, we've talked about that. That was kind of our historical low here. We've seen it pretty much go up and down since the 2021. But now look at recently. We've seen an increase quite dramatically up to 3.55%. Now, I'm hoping that that might be a good sign, but we're going to see as far as economy goes. And these are the projected rates. Obviously, they change all the time, because these are just projections. Nothing is completely concrete until the day of the forecast. But if we look here, we're looking at them continuing to go up though. They're not averaging or looking at them going down. And if you go into 2023, but the good news is they're still under 4%, which I still think is a good rate. But I have a feeling this year, especially now, might be one of the better times for buying with the mortgage rates. Let's start here. This blue, I'm just going to kind of talk about the mortgage rates, looking at a pattern here. So all the way to the left, this is 2018. All right, and then this is the growth we've seen all the way to 2020, and then we get to 2021 down here where you can see it dipped very low. And then we're seeing up until this year, we've seen actually an increase over just this first week of February. And then where are they going? Those are those predicted rates that I just showed you on the chart, but now you can kind of see visually, graphically, where they plan to be going. So Sam Cater says that as mortgage rates rise, we do expect some moderation in housing demand, causing house price growth to temper. However, the combination of a large number of entry-level homebuyers facing a shortage of entry-level inventory of homes for sale should keep the housing market competitive. In 2022, we expect purchase originations to grow from $1.9 trillion in 2021 to $2.1 trillion in 2022, while refinance activity is anticipated to decrease from $2.7 trillion in 2021 to $1.2 trillion in 2022. Now let's look at this. This is current mortgage rate compared to the last 5 decades. So we're starting in the 1970s again, looking at the last 5 decades. And we're looking at the current mortgage rate. So if you look at the 1980s, my goodness, 12.7%, right? So this is what we've seen, and this was 2010s. In the blue, this is the current mortgage rate. So yes, it's gone up, but still good if we look over the last 50 years. Let's also look at 10-year Treasury. Now, 10-year Treasury yields has been skyrocketing. All the way to the left, we're looking at December 1st of 2021. So really just 2 months ago. We're looking at what's been going on just since December, all the way up to February 1st. So we started at 1.43, now we're at 1.81. And I'm going to show you this other graph because I want you to see why I'm saying let's look at the 10-year Treasury yield. And this is something I'm going to continue to watch because there is a relationship between your mortgage rate and the 10-year Treasury yield. So now look at this over the last 50 years. When you look at the pattern here. The 10-year Treasury yield is in blue. The 30-year one is in orange. Okay, average spread is 1.7, but notice that the mortgage rate, the 30-year fixed mortgage rate, is consistent with the 10-year Treasury yield. So that's why I say watch that. So in the last 2 months, it has grown. It has increased, I should say. And we've also seen the mortgage rates increase. So watch the Treasury yield, and you can kind of get an idea of what to expect with the mortgage rates. Joel Kahn says that mortgage rates hit their highest levels since March of 2020, leading to the slowest pace of refinance activity in over 2 years. So they are seeing less refinance going on with the higher mortgage rates. Let's go into home sales. Average days on the market, it's gone up, I think, 1 day since we last talked about this. So the average day is now 19 days. And you can kind of see we do have a couple states in the dark, but that's just West Virginia and South Dakota, just 2 of them. Existing home sales, so this is looking year over year. U.S. has been down by 5%. Northeast has hit the hardest hit here. Midwest, 0, so year over year, no increase or decrease. And then the West is at a negative 10.1%. If you look graphically, orange is 2019, blue is 2020, green is 2021. You can kind of see how we've seen growth in existing home sales over the last 3 years between 2019, 2020, and 2021. What about new home sales? Notice in 2020, they had a lot of home sales. They're still doing well with 2021. Actually, they saw a lot in the beginning of January, February, March, so the first quarter of 2021. But they have seen a lot of growth because there's not as many resale homes on the market, so the new home builders have been getting a lot more customers. In fact, new homes are selling fast. This graph is showing the median months from completion to sold, and you're looking at this starts all the way from January of 18. Now we're going over to January of 21. We're finding it's taking longer for the homes to be built, and we know we had some issues with supply and demand and also supplies with home builders. I know Brent and I built last year, and we definitely waited about, I'm going to say 7 months for time of completion because they had to wait for a lot of different supplies. Lumber, I know windows took a while, and cabinets were another one. Here's total home sales. This is new and resale. This is just total. So 2020 is like the orange, 2021 is in the green. Notice that you don't see a slight, like a huge difference here. I thought that was very interesting. Percent of distressed properties, because I know a lot of people wonder, well, how many distressed properties are there, right? How many homes are in foreclosure and short sales? This graph starts you in January of 2012. There were quite a few. Now let's look at January of 2021, which is at the end. Not so much. So it's actually, if you look at the graph, distressed sales represent less than 1% of the sales from December. So we're actually doing very well when it comes to distressed properties. All right, home prices. Sales price of existing homes. Now again, this is year over year. So US has seen about 15.8% overall, but look at the South, 20.2%. That is quite a growth. I will tell you, we've seen that definitely here in the Orlando area, pretty much Florida. And now let's look at change in home prices year over year. So this is going month by month from January, well actually this is December of 2020, all the way to November of 2021, because this is the data that we have up to now. And you can kind of see the change in home prices. So you see it kind of hit that peak up in July. And then by November, we're at 18.3%, but still not down to where we were in December. And again, here's year over year percent change in price. Current is 18.5%. That's quite an appreciation. The forecast is 3.5%. Anxious to see what happens in 2022 for this year. Housing inventory. Here's your seller traffic index. I know my map looks a little different now, but if you look here, most of the US for seller traffic is still considered in the weak. Now you have a few states that are starting to hit stable and strong, nothing very strong yet. Year over year inventory, still lacking. I mean, we still have more buyers than we do sellers. However, look at the new home monthly inventory. So look at that difference. We're in a deficit with the resale homes, but we have a definite amount of homes if you're looking for new home construction. And here's your new home monthly inventory. So red is 2020 and blue is 2021. So you can see that in 2021, they actually started to get more growth and more inventory, which has been great. We're seeing a lot of new home growth over here in Orlando, mostly a lot in the western Orlando. I'll tell you what, in the Claremont, Mineola, Groveland area, it is growing like crazy over here. But what about buyer demand? So home buyer demand, again, jumped nationwide in December, rounding out a historic year. So if you remember, I showed you the graph last time of the Orlando sales, and I was pleasantly surprised to see that December ended up hitting my peak when it was originally June. And so Michael Lane says that 2021 was a banner year for residential real estate as buyer demand was up nationally for most of the year, pushing the ratio of showings per listing to historic highs. And you can see the Northeast actually did very well here with buyer demand. What about the buyer traffic? How is that looking? This is from December, so we always have to kind of go with what data we can collect in time. And if you look, we actually have some states that are weak in buyer demand, so buyer traffic. But a lot of states are considered strong and even stable. We just got to get that seller map back up to stable or strong. Very strong would be amazing. Mortgage credit availability. So average days to close a loan, it's been about not too much of a change. If you look, this is just showing you over the last year, the average days it took to close a loan. January had the highest, which was 58. And then if you go down to August, you're looking at 46. Average FICO scores for closed purchase loans. So these are your average scores for loans that have already closed. Conventional always typically has the higher, which is 755. FHA is typically the lower, which would be 676. And then you kind of see an average for all the loans. All right, so I've done my spiel. Now it's time for the Orlando update. Now notice our map. We're starting all over again. We're starting from the beginning, which is January. So the blue is from last year, which is 2021. We had a really good year. Now look at January of 2022, this year. We've already seen it surpass last year. So last year it was the lowest of 2021 as far as sales go. So we've already seen a better January this year. Let's also look at the average sale price. Now, average sale price last January of 2021 was around $325. This last month, it was around, I'm going to say $389,000. So a little under $400,000. So we've already seen growth compared to last year with the average sale price. So I'm really anxious to see how this year is going to play out, specifically in the Orlando real estate market. All right, as you know, we always have our buyer and seller guides. They're always specific for each season. So in March 4th, starting March 4th, we're going to have the buyer guides and seller guides. So if you would like a copy of any of those, please feel free to get us through our website. You can click Contact Us Now at lawhonhometeam.com. And if you have any questions about the Orlando area or its real estate market, feel free to call us at the above number, or you can visit us at our website at lawhonhometeam.com. If you're enjoying our videos, please like and subscribe to our channel.